Hi guys, welcome to another episode of Finance Talk, where we speak about finance, business, and investing. I'm Eugene. I have more than 10 years of experience in business. I also interested in finance and building my own portfolio and hoping to set up a fund in the nearest future.
And I'm Nick Rational. I too have a lot of business experience and been doing the investing for a while now. Together, we're going to share with you what we have learned, and together we can all learn more and become greater investors. I too hope to start a fund in the near future, and let's all learn together.
So, what will be our today's topic, Nick?
So today's topic, I have found in my life that to be a good investor and also perhaps a good entrepreneur, and even just to succeed in life, we need a whole stack of little superpowers. And the one I want to talk today about is, I'll give three examples. So we've got, if you can master the to-do list, if you can master spreadsheets, and if you can master checklists, you will be better at all of those things and more. So today's topic is checklists, and I thought that would be a good topic for the day. A checklist is an interesting thing. It is as short as it possibly can be, a list of things to check to be certain that you're not leaving out or missing something crucial. A good example of where checklists are used would be the pilot's pre-flight checklist. Yes, they could make it 200 points long or 500 points long, no problem. But the point of a checklist isn't to be exhaustive. It's just to have the crucial stuff that you know you're not going to mess up in a big way. And you go through that checklist, and it's usually short. In investing, I've seen checklists from 2 points up to maybe 200 points. And so our job will be to dig into what makes a good checklist and different ways that people use checklists. And then in future episodes, we might even go into some of our favorite investors' checklists and talk about how those are useful and how they use each of their points. So what do you think of this topic?
This is a great topic, and you're absolutely right that when we invest in companies or analyze them, we need special checklist in order to learn as much as we can do and not forget the crucial points. And actually, if you look at top value investors or gurus in investing in general, like Warren Buffett, Charlie Munger, Manish Pabrai, Guy Spear, Lee Lu, and others, they all have some kind of mental checklists. It's like the mental models, a set of filters, how they evaluate the companies, how they filter the information around them. And actually, this thing can help you tremendously in life. And it can make your life so easy that you will definitely increase the productivity and the effectiveness of your decisions.
A good example of a checklist that's more on the vague side and yet still very important to bear in mind, I think Charlie Mungers, how he does the investing, he has just 4 points on this checklist. And I believe that each of those points, you could have multiple checklists under. So you could have a checklist and then sub-checklists, and maybe even sub-checklists for each of those points too. The checklist shouldn't be too long though. So one has to balance making sure you're not making any mistakes with keeping it as brief as possible. I thought for our benefit, I could read you Charlie Munger's checklist. It's only 4 points, but you'll see that he covers so much in such a short. I've never seen such an incredible amount of value in such a short amount of words. So he says, we have to deal in things that we're capable of understanding. Point number 2 is we have to have a business with some intrinsic characteristics that gives it a durable competitive advantage. It's such a short sentence, and yet there's so much in there, and we can really unpack that. And then the third one is, and then of course, we would vastly prefer a management in place with a lot of integrity and talent. And finally, the fourth point, no matter how wonderful it is, the company, it's not worth an infinite price. So we have to have a price that makes sense and gives a margin of safety considering the natural vicissitudes of life. And so essentially, that margin of safety protects us if we were wrong about anything in the previous points. And also, if something changes, that margin of safety is what protects us, like a safety cushion. So, in just 4 points, a 4-point checklist, he's almost covered everything. And yet, I've seen podcasts take 200 episodes to just unpack those 4 points. We're not going to do that, but we will discuss many checklists and briefly what the people's points are and how they affect our investing, that kind of thing. What are your thoughts, Eugene?
I really love this checklist, and this is really powerful stuff because if you can really master these 4 points and truly understand how to evaluate the company based on them, you can be probably one of the best investors in the world because there is so much wisdom which is bring to these short words, and just starting from the understanding that what you know and what you understand to bringing the management to building to finding the competitive advantage of the business and buying at the particular price. So this is the 4 points which primarily describes the whole process of investing. This is the simplest version of that because probably Charlie Munger and Warren Buffett have like bigger checklists for a particular industry. We spoke about that in our previous episodes that you need to evaluate the particular business in a particular sphere differently. So, for example, when you evaluate the retail stores or the software company, these are completely different businesses, even though they have common things like cash flow, income statement, balance sheet. These are completely different things, like two completely different people. This is the same with the checklist. So ideally, if we speak about the evaluating the companies, we need to have some kind of special checklist and special bullets in our checklist for the particular companies in the particular fields. What do you think about that, Nick?
It is very important to make clear to our listeners that a checklist is there to make your life easier, simpler, and safer, and not to. It can sound overwhelming, but in truth, in actual use, it makes your investing. It cuts hours and hours off of your investing. It gives you a certain degree of certainty that you wouldn't have had without it, because it ensures that you don't miss any important things. And if you're using it correctly, and that's what we'll try and do in this episode, is describe the different ways to use it. It will mean that you waste less time in researching a company that's perhaps not as good. So one of the ways to do this would be to have a small checklist that you start off with, and if it doesn't meet those criteria, you just drop the company and you don't work the rest of your checklist. And if it does meet it, you move on to the next part of the checklist. So you might start off with just 4 questions and then move on to 8 questions. And then depending on how it does with those, you move on to 27 questions. And the bad companies will fall away very quickly and you don't waste time on them. And the really good companies are the ones that you'll end up doing your whole checklist. And what I recommend is as you become more of an intermediate investor, where you're starting to know what's going on, that your checklist be at least sort of 100 points, if not longer. For example, Monish Pabrai, one of the world's great investors, his checklist is around 170 questions, and so we know that it's wise to have the right questions, sort of between 100 and 170, I would say, or 100 or 200, and also that idea of sub checklists. And so it's not just 170 questions. It'll be like, now we're looking into management. What are the top 10 questions we need to know about management? And it's pretty simple. It's not all complicated. It's
Yeah, I agree with you that it's not so hard to do. And actually, it's a little hard in the beginning when you just try to implement this mental model in your everyday life. But then you would start thinking and you would start noticing that everything around you is basically the checklist. So as Nick said, autopilots have like checklists. Search filters and search results are also like the results of the particular checklist. Even our videos and our topics which we discuss in our episodes, this is also the checklist which can help you to understand the business and investing better. And just collecting these titles and information about from each video, you can actually create your own personal checklist of how to evaluate the company. And personally, I have also the checklist. It's like 100 points, depending on the particular industry. You can use like simple notes or different documents like Excel spreadsheets in order to just gather all pieces together. And as Nick says, it is really useful to prioritize your parts of the checklist. So, for example, when you just have like 3 or 4 initial main questions to every business which you would like to start analyzing, and if the business doesn't pass these 2 or 4 criteria, you do not go further. And this is the great quote by most investors who just operate their enormous amount of money, that you need to be really good at saying no, because there are so many opportunities coming to you every day, and you need to filter them in a proper way, and you need to catch the opportunities which are really worth that, and which will give you enormous advantage in the current and future situations.
Another thing to point out is that there's no right or wrong way of doing checklists. And so some people, it's just questions and you're filling it out. And by the end of it, if you fill out all the questions, you've almost got a little miniature book about the company that you're investing in that you can refer to later. So you could even print it out, put it in your shelf, and you end up with 20, 30 different books of companies that made it all the way through the checklist. And you can look it up and go, yeah, these are the questions. This is what I know about the company. And so that's the one way of doing it. But there are investors who, for example, maybe their checklist is just 27 points and they're all to do with risk. The answers aren't long form, so you're not writing out a book. It's a yes or no question. And at the end of the 27, they count the yeses, and that score is how risky the company is and whether they invest or not. So the bottom, 20% score would be these are horrible investments. The top 20% score, would be the ones they want to get into. And the middle is kind of like not such great companies, but they'll keep an eye on it and see if the score changes. So you've got your long form answers to understand the company and that sort of way of doing a checklist. Then you've got the binary option where you've got yes or no's and you count the yeses and you know how risky it is. Another way of doing it is a score based one where you've got you predetermined answers that, like, if the growth rate is between this and that, it gets 2 points. If it's between that and that, it gets 1 point. And if it's between that and that, then it's 0 points. And then all the questions are like that. And then you count the points, and that again gives you a method of investing. So there's multiple ways of doing checklists, and different investors do it different ways. I believe the Motley Fool, David and Tom Gardner, have those kinds of checklists that I talked about, the binary one and also the points-based one. They've used them throughout the years to good effect. And then Phil Town is more of the long form, write out all the different, make sure you know that company inside and out. And there's nothing stopping you from doing your own method or a blend of the above ones. Your thoughts, Eugene?
Yeah, I definitely agree that it purely depends on your investing style and system which you just use in order to process and learn new information. Personally, I consider using the checklist or analyzing the company as like the investigation or the curious journalism. So, for example, imagine that you need to write an article for the blog, or you need to record the video or something, and you need some kind of the plan and bullets in order to understand the particular company or the particular situation, which is out of the ordinary system, because we as value investors go to we look for anomalies and we look for unexpected situations when others are fearful and we need to go and step and purchase the particular company. You create a special list like the plan, and you just stick to this plan, going inside of the internet on different websites, analyzing, talking to people, watching their profiles, watching interviews with them, and all this stuff. And this is a really great type of the checklists, and this is the really great style which you can just implement and just go little by little. I did the same way. Probably you can just implement other parts of different systems in your life. But I think it will definitely help you in your investment analysis as well.
I think to wrap up this episode, I'll give like an example of just off the top of my head how you might start to construct your own checklist. So maybe the first point will be how does it come across my attention? So like maybe you heard from a friend or you used a screener tool and you're looking at some potentially prospective companies. And so maybe your first checklist will be just the kinds of stuff you could put into a screener tool. So you'll check the growth rates of various things. You'll check the return on invested capital. You'll check the debt compared to free cash flow or to equities. You'll check the Altman Z score. So now we've already got a checklist of like 5 or 6 things. And then once it's past that hurdle, and a lot of companies won't, then you move on to the next step and you go, how are they allocating their capital? Do I approve of it? And at the end of your checklist, however big you make it, once you've decided that this is a wonderful company, I would say that's the primary reason for a checklist, is to see, is this a wonderful company that I can believe in, that they're going to be bigger in the future? They've got the moat. The moat questions are probably the most important ones, making sure they've got that durable competitive advantage. Most of the list is going to be towards that, and also making sure you don't have too much downside or risk associated with that company. And then the very last point will usually be to do with what's the company, even though we know now it's a wonderful company, the last point on the checklist will be what's the current value of the company, not the price, but the value. And you use whichever method you are comfortable with to determine what you are willing to pay for that company, or what you think a fair price is, and then you decide your margin of safety. Perhaps that's what you want to spend. And then you look at the price, and if it's not the right price, you just add it to your watch list. You keep an eye on it until an event makes that price go down to where you want to buy it. Is that a good summary for a checklist?
Yeah, this is really great. And I want to add, in order to make your life easier, you can just go and search for your particular favorite investors and just find which checklist they use in the evaluating the companies. Usually, most of them are available online, and you can just read them and implement in your system. And you can also, if you are a beginner in the investing, you can just try to use some pre-install filters and in the screeners, etc. So it's like it also can be like the initial checklist for your analysis, like for example, 52-week low, or the lowest gains today or in a particular week, etc. But anyway, we think that this information will be useful for you, and this is the end of this episode. In the next episodes, we will cover more advanced stuff about the checklist and all these systems of different value investors. So if you have any ideas and questions, please write down them in the comments below, and see you next time.